you can claim a good amount of refund in that case, not with just non-refundable credit, but the ultimate amount, right? It's anyways going to reduce your liability. So as per the Income Tax Act 118.5, individual receives a credit tax against tax payable equal to 15% of qualifying tuition fees paid with respect to the calendar year, regardless of the year in which they're actually paid. So suppose if you are having like 5,000 in tuition is owed, $5,000 in tuition is owed, okay, for the current year. Even if you have not paid it, it's just owing. Then also you can claim the credit for that tuition fees. I'm sure you must have claimed the tuition fees, right, guys? Do you claim it? Anybody?
Yes, ma'am, we included them to our, yeah.
You did, right?
Yeah.
And you have claimed the credit. Okay.
Yeah, I think, yeah. First
You
time.
think? Okay.
Yeah,
Yeah.
first time for me.
You get some T22 something, right?
Yeah.
Yeah. So yeah, so if 5,000 is just owed also, if you haven't paid it in this calendar year, you can claim the credit of that 5,000, 15% on that, okay? And the fees must be at least more than 100 or more than $100, but there is no upper limit for the fees. Now, the tuition fee qualify for the tuition fee paid to a university, college, or other institution for post-secondary courses located in Canada. Tuition fee paid is to an institution certified by the Minister of Employment and Social Development for a course that developed or improved skills in an occupation. Fees paid for occupational skills that are not a post-secondary level qualify for a credit as long as the course provide the individual the skills in occupation. For individual must be 16 years or older to qualify for the credit. Tuition fee paid to a university outside Canada to qualify the course must have been a minimum duration of 3 weeks. See, for individual who live near US border and commute, tuition fee paid to a US college university for part-time students also is included. Okay, you are qualified for that. Now, ancillary incomes, ancillary expenses. So tuition fee will have some kind of examination, material fees, or some kind of, if you're in a full-time college, you will have to pay some health services, athlete services. So in that case, to the extent that such fees are required for full-time student, if the student is attending full-time, and all the part-time students, if the student is attending part-time, these fees are eligible for inclusion in the base of to claim the tuition fee credit. So the general provision of ancillary fees is found while the Income Tax Act 118.5 subsection 3, while the provision for ancillary fee is also found in subsection 4. If such fees are not required for full-time or part-time students, it allows up to $250 in such ancillary fees to be added to the total. So whatever tuition fee credit you are claiming, you can claim that amount, okay? 50 fees and 250 for examination fees, even if it's not mandatory. And you can carry forward this amount for an unlimited period of time, if you really feel that you want to carry forward. Now, how does the carry forward works? Like there are situations in which students does not have sufficient tax payable, like you don't have sufficient to use their tuition fee credit, like you don't want to, because if you don't have a sufficient tax payable, you cannot claim the credit because it will turn to zero. Suppose you have just 5,000 tax payable and your tuition fee is, no, suppose you have, because tuition fee credit, and you, okay, 5,000 tax payable and your credit already is like 5,000, 4,500 or 4,700. Now you want to claim the tuition fee, and the tuition fee available is 15% of whatever amount you claim, right? So if at all you are claiming that amount, and if you feel that it's going to be negative, and then if it's negative, that means you don't get the refund, but you get it's converted to zero. So in that case, you are not utilizing your credit to the full capacity. So in that case, you can carry forward that tuition fee in the future years. Okay. And in that case, you can of unused, and there is no time limit to carry forward this tuition fee. So that's something which is a good thing for you, and you can carry forward this as many years as you want. Unlimited carry forward by the student. Interest on student loans. Now there is a credit available if a student or a related person has paid the interest on student loan. Now, the credit of the student is equal to 15% of the interest paid, whatever is the amount paid, and in the year or any of the 5 preceding years, because it can be carry forwarded only for the 5 years. So the interest paid must be a loan under the Canadian Student Loan Act, the Canadian Student Financial Act, or a provincial statute. Okay, and yeah, and the credit is not transferable to anybody else. Okay, you only will be able to claim that credit, not your spouse or anybody else. Okay, so in that case, interest on student loan is not transferable. The to carry amount, okay, well, that's all fine. So transfer of tuition fee credit. Now, if I Income Tax Act 118.9 provides for a transfer. Guys, who's making noise? Can you please reduce that? Or can you mute yourself? Thank you. So Income Tax Act 118 section 0.9 provides for a transfer of tuition fee credit to parent or grandparent. Like there is a act in the income tax, there's a section which provide for a transfer of the credit plus several others to a spouse or common law partner. And even there is an act which says that the limit the total amount of tuition fee credit that can be transferred under either of this provision. The transfer is at the discretion of the student, and legislation states that he must indicate in writing the amount he is willing to transfer. So under the act, you are able to transfer the amount of tuition fee, that is the tuition credit, to your interest on loan is not transferable, but the tuition fee tax credit is transferable to your parents or grandparents or your spouse or common law partner. The maximum transfer for an individual student is lesser of the available credit, and 5,000 multiplied by the tax rate, that is 15%. So it should be 750 maximum amount of transfer. I think I remember, Mercy, you were telling me something about the transfer of the tuition fee credit. Were you? Sometime in the couple of classes ago, you were talking to reduce the tax liability. You were telling me that you haven't mistaken. I'm not sure. Okay. This 750 amount maximum must be reduced by students' tax payable calculation after same credit used to calculate the carry forward of the tuition fee credit. Excuse me. So that is the tuition fees credit. Okay. Now, even employment in like people who are working are able to claim CPP and EI. Give me a moment. I'll just get a glass of water and just cough. Okay. So CPP and EI. So 15% of the actual payment maximum for 2019. The employment insurance is $129. That is 860 is the insurable earning, and CPP is 412. So Income Tax Act 118.7 provides a tax credit equals to 15% of the employment insurance premium paid by an individual. All of the Canada Pension Plan contribution paid on employment income, and half of the CPP contribution paid on self-employment income. So you are able to claim that amount. Okay. Now for CPP, the maximum insurable earning is 57,400, and the basic exemption is 3,500. Now, guys, the maximum CPP earning what you can claim is 412 after 15% credit, or 2,749. Okay. Now this provides for a maximum depending upon, and there is a schedule as well for calculations. So if you would like to have a look at the schedule, in that case you can complete the schedule 8 and get complete form RC 381, whichever applies. RC 381 doesn't apply to us because it is related to the QBAC. Okay. So because we are in Alberta, yeah. But EI and CPP, the maximum insurable earning, and the Canadian pension plan, the maximum what you can claim as a non-refundable credit is 129 and 412 for the current year. And even a self-employed individual earning business income must make a matching CPP contribution for himself, effectively paying twice the amount he would as an employee. So, even the self-employed doing a business, earning a business income can claim for half of the amount of CPP. Okay, so half of the CPP contribution paid on the self-employed income. And EI are based on the maximum insurable earning of 53,100 and at the rate of 1.62. So that is resulting into $860. And 5% of $860 is what we get it as a 15%. Now, well, it is not very common, but sometimes, employer makes an error when you are working somewhere. Okay. What will employer do is like they will deduct some extra amount of CPP or EI from your earning. Well, in that case, what happen is that if they try to, or if they does that in that case, or else when you're working for multiple jobs, like couple of jobs, or you are changing the employer, in that case there might be some CPP overpayment or EI overpayment. So in that case, you can claim that overpayment by filling the schedule. What I mentioned is Schedule 8, and you can claim the extra amount as well, what you have made the payment for. However, that overpayment will be a refundable tax credit, not a non-refundable, because that's actually you have paid it. So you will get that money back in your refundable tax credit. So that comes like when you are scrolling through the form, you will try to when you are going through the form on page number 8. I don't want you to see it now, it's okay when you are at your own pace. Just wanted to show you in the line 44,800 and 45,000, there is an overpayment line. So if there is an overpayment, you can always payment in excess of maximum eligible for refund in tax return. As I said, it's a refund. It's a refundable tax. Okay, if it's an overpayment. Okay. Transfer of credits. Now, there are several tax credits that can be claimed by either spouse, such as charitable donation credit. There are several. We have covered like the credits, which what if you don't want to be deducted from your taxable income, even the spouse, you can transfer it to the spouse, or spouse can try to take a split of it. So we have covered several tax credits that can be claimed by either spouse, like even a husband or a wife. Like even charitable donation credit can be claimed by a wife, or even if it is on my behalf, my husband can claim that donation. However, there are 4 tax credits that can be transferred to the spouse or common law partner. Broadly speaking, there are 4 tax credit. The amount, we talked about the age one, that amount can be transferred. The pension amount, which we talked about it can be transferred. The disability credit can be transferred, and even the tuition fees can be transferred to they can be transferred as well. So if you want to claim, if you want to transfer it to your parents, or if you want to transfer it to your spouse, you can transfer that amount. Okay. So they are the transfers of credit. And the maximum amount that can be transferred is based on some of the preceding credits. So there is some calculations again, and so you can just calculate it based on the preceding credit and decide whether what amount you can transfer it. Okay. So amount transfer from your spouse or common law partner. Now, yeah, that will be individual. So you have to fill in or schedule 2. And if you fill in the schedule 2, that will be able to give you the amount what exactly you can transfer it to your spouse or common law partner. After calculating the personal CPP credit under this and the tuition fee credit, whatever is the balance. Am I going?
Yes.
I know now I started listening to my voice, in fact. So that is what you can transfer. Okay. Yeah, so there's a transfer of credit. Guys, this is a very good thing, because if you transfer the credit to your spouse, okay, in that case, the best part is if you transfer, and if your tax liability is very high, you can reduce their tax liability to that extent, because you are anyways having lesser tax. Okay. So you are under coming 15% bracket. So you want to bring them under 15% bracket, you can ask them to reduce the transfer. Yeah. Transfer of credit to parent or sorry guys, I'm still not liking this voice which is coming up. I don't know why it is coming now. I think I'm okay. Transfer to a parents or grandparents not applicable if student's spouse claim the credit. So if the student is transferring and their spouse is claiming the credit, you cannot transfer it to your parent or grandparent. Unused amount after personal CPP and disability. To parents or grandparents also, you can transfer the 750. That is a tuition fee credit. Carry forward by students only if unused. Yeah. So that's the transfer to parents or grandparents. That's the only amount which can be transferred. Otherwise, we talk about the transfer to the spouses. I think even MJ was talking the other day to me. I mean, well, she mentioned it in the chat out itself that even her income tax liability was high, and then her daughter is earning less than below some amount, and then she also claimed the tuition fee credit into her income tax. She claimed her daughter's tuition fee credit into her income tax return. I believe so. You know what? So yeah. Political contribution. So if you are making any political contribution to the federal party, so by an individual to each registered party or in total of the registered association, nomination contestant and candidate of each registration party, in total to all leadership contestant, to each independent candidate, in that case you are eligible for a credit. So federal credit is available on monetary political contribution made to the registered federal political party, to candidate at the time of federal general election or by election. So if you contribute some amount, any amount, you will be eligible for a credit of a maximum of $650. Even if you contribute more than more than that amount, your contribution will be calculated in this amount. For first $400, you'll be calculated at three divided 3/4 of the 400, that is 75%. Then the next 350 amount, that is suppose $750 you have contributed. So for first 400 will be calculated based on 75% or 3/4 of it, and the next 350 will be calculated based on the half of it. And if you have calculated, like if you have contributed like $1,500, so in $1,500 you will only be eligible for contributing 400 and 350, and that is 750. So 750 minus $1,500, whatever it is, that is only 525 of the rest will be able to uh, claim it. You cannot claim more than that. The balancing amount you cannot claim it. Okay. So yes, is limited to the amount that can be contributed. The amount that can be contributed is also limited. Okay, credit is different, but there is an amount which is contribution amount as well. So amount which will be contributed is also just individual limited to $1,600 for registered party, candidate or leadership contestant, nomination contestant, and corporation. It is legally banned. Okay, totally banned. So yeah, Canada Election Act. We'll be doing one problem on political contribution credit. Okay, because they have a different calculation. They have this kind of not 15%. So there are primarily two kind of non-refundable credit which we have learned till now, that they are not using 15% straight away credit to calculate the non-refundable tax credit. One is if charitable donation is using different tax bracket, and the second one, it is political contribution which is using a different brackets as well, based on the 3/4, 1/3, and well, it is also said to be like 75%, 50%, and 33% bracket. Yeah, we'll do that problem anyways. Labor sponsored funds. Now, what are labor sponsored funds? Can anybody research and tell me what are labor sponsored funds? Because you all are awake, sleeping, I don't know. So I want to know.
Labor-sponsored funds are tax-subsidized investments funds that
Okay.
get a contribution from individual investors through generous tax incentives and invest the funds in entrepreneurial businesses.
Okay. Okay. Thank you. Any tax refundable, non-refundable stuff? Do you want to speak a little bit more? Anybody? what is the implication of tax refund or non-refundable tax credit implications? Anybody?
Non-refundable, and what was that again?
Yeah, non-refundable. Is there any non-refundable tax credit on labor-sponsored fund shareholders or registered holders?
Non-refundable.
Non-refundable. Reduce.
Waiting.
I'm confused about the question. Was it labor sponsored?
Well, the question is like, yeah, it's labor-sponsored funds, right? So what is the credit available in terms of if you are a shareholder of the labor-sponsored or LSVCCS shareholders? Okay. So do you get any credit?
You may be able to claim a credit if you became the first registered holder to acquire,
Mm-hmm.
irrevocably subscribe to, and pay for
Okay. Okay.
an approved share of the LSVCC from January 2019 to March 1, 2020.
Okay. Thank you. That was nice.
Tax credit is
And
personal.
thanks, Eleanor, as well.
Non-refundable.
Okay, so there is Kathleen who is mentioned about and MJ. No, there is Kathleen. Labor-sponsored funds are tax-subsidized investment fund that attract contributions from individual investor through generous tax incentives and invest the fund into entrepreneurial business. If you bought shares after 2003 of a provincial or territorial registered LSVCC that is not federally registered, you can only claim the federal sponsored fund tax credit in respect to those shares if a provincial or territorial income tax credit is also available to claim for. Okay. So now labor sponsored funds basically are the form of mutual fund. Okay. So I'm sure you must be aware about mutual fund corporations, you know. So what they are sponsored by an eligible labor organization, and they try to fund the amount to the small and medium term sector who are venture capital. You know, now venture capital means, you know, I would like to say something about venture capital. Venture capital is something who try to get the fund. If I have a new idea of business which nobody has implemented that idea, okay, something very new idea of business, so nobody is going to invest in my business, right? Because my idea is not some to be something which is already proven and tested by anyone. So it's called a venture capital. So it's called it's a new idea. So that kind of businesses will try to go to venture capital fund or try to go to institution who are offering venture capital fund. That means the new idea of business is what they offer it, because it is a risky type of business. So in that case, they are considered to be venture capital. And labor-sponsored venture capital corporations are labor organization. They're sponsored by the labor organization and who contribute the fund to the small and medium-sized businesses. Now, if you are the first registered holder, okay, you are able to claim the credit, the non-refundable tax credit. Okay. So there is a 15% federal tax credit for provincially registered LSVCCS prescribed under ITA. So you get a 15% tax credit. Okay. If you are a first registered holder, the maximum credit available is $750. To be eligible for federal tax credit, the provincially registered LSVCC needs to. So even if you want to be eligible for the credit, then even LSVCC needs to also be qualified for the three things. Okay, first one is to be eligible for provincial tax credit of at least 15 individual share. mandate has that at least 60% of LSVC shareholders' equity be invested in small and medium-sized enterprises. So in that case, only they can be eligible if you are a first registered holder, means the shareholder of LSVC. LSVCC, that is the venture capital fund, labor sponsored venture capital. In that case, you are eligible for a 15% credit. Now, do you want to do some research for support for Canada's non-refundable tax credit for support for Canada's media sector? If you can speak, it's great, rather than just putting it on the chat, guys. That'll be great. Except when you're not able to. Non-refundable tax credit for support for Canada's media sector. I am still waiting from you.
Support from Canada.
Ah.